Hey there, folks. Welcome back to Simple Money Pulse, where we make money stuff simple. If you are a regular person like me, trying to grow your savings for a better future, maybe for retirement, a house, or your kids' college, this video is for you. Today we are diving into what the biggest investment firms, BlackRock, Vanguard, State Street, Fidelity, etc., say about investing in 2025. These are the pros managing trillions of dollars. So let's see what they think and how it can help us. Grab a coffee and let's get started. I've grabbed one. Okay. So the first section of our discussion is that what's the big picture of 2025. First, let's talk about what's going on in 2025. All these firms agree the economy is changing, changing fast. Things like artificial intelligence, yep, AI like your phone's assistant, but way bigger. Green energy and global trade shifts are shaking things up. Prices for stuff might stay higher than we're used to, and interest rates probably won't drop back to super low levels like a few years ago. That means your savings account won't grow much on its own. So, investing is key to beating the inflation. So, the question arises, where should we put our money then, if investing is the only option for us? So, where do these firms say we should invest? Here's the scope on it. Number one is stocks, aka shares in companies. BlackRock loves US companies, especially big ones like tech giants. It includes OpenAI, NVIDIA, etc., because they're making tons of money with AI. They think US stocks could grow about 6% a year over the next decade. Uh, Whereas Vanguard says hold off on betting too much on US stocks. They're pricey right now. Instead, they like stocks from other countries like Europe or emerging markets, which could grow 6.5 to 8.5% a year. State Street and Fidelity agree. Mix US and international stocks to spread your risk. Fidelity thinks stocks overall could grow around 5% to 7.5% yearly, depending on where you invest. So, from all these points, the takeaway is that stocks are a great way to grow your money over time. You don't need to pick individual companies. You don't have to be finicky with it. Just use something like an index fund, which is like a basket of stocks, to keep it simple and safe. The other option, which is after if you are not interested in stocks, it is bonds, aka loans to governments or companies. They're a bit safer option. All four firms say bonds are looking better now because they pay more interest than they did a few years ago, around 4% to 5% a year. BlackRock likes short term bonds like ones you hold for 1 to 5 years to avoid big risks if interest rates climb. Vanguard and State Street suggest sticking with safe, high quality bonds like US government ones. Fidelity says you can mix in some riskier bonds for extra income if you are comfortable. So, holding these points off, the takeaway is bonds are less exciting than stocks, but safer. They're good for balancing your investments, especially if you are closer to needing your money. The third one I call is the other stuff. And what is other stuff? It's like private investments or gold. BlackRock is big on private markets, like investing in new AI companies or green energy projects. But these are tough for regular folks like us to access. They also think gold might do well if the economy gets shaky. Vanguard sticks to simple stuff like low cost stock and bond funds because they're easier and cheaper. State Street likes investments tied to saving the planet, like green companies, although they're not that green. That's another video, but still, green companies. And Fidelity focuses on teaching you how to invest smart, not chasing fancy stuff. So, in the private arena or gold or any other metals or utilities, the takeaway is stick to what you can easily buy, like stocks or bond funds. Gold or fancy investments might be cool, but they're complicated and risky for most of us. So, moving on to the next section, what are the risks in this economy, stormy, volatile economy? Nothing's guaranteed in investing, and these firms all point out some risks for 2025. Price hikes and rate inflation. Price hikes and rates. Inflation might keep pushing up costs, and interest rates could stay high, making loans or mortgages pricier. Trade drama, things like tariffs, taxes on imported goods could shake up markets, especially if countries start trade fights. Market dips, stocks might drop if someone gets nervous about the economy or politics, but the firms say these dips are normal and can be a chance to buy low. Then what to do? Don't panic. Keep some cash handy. Don't put all your money in one place. Spread it across stocks and bonds, US and international. And I think you guys will be safe with your investments. Okay, so the question now arises how to invest smart in 2025. Okay, so how do you actually get started? Here's what these firms suggest boiled down for US regular folks, and that is number one, start simple, use low cost index funds or ETFs. Vanguard's all about keeping fees low, and they're right, fees eat your savings. And number two, mix it up. Don't just buy US stocks and some international stocks and bonds to protect yourself if one market tanks. uh, don't just buy only US stocks. Just spread your investments with international stocks and then bonds, US Treasury bonds or government bonds. If market tanks, one market tanks, other market performs better. BlackRock and Vanguard both love this idea. Number three, think long term. Fidelity says don't stress about daily market ups and downs. Focus on 5, 10, or 20 years from now on. It's a long term investment and race. These are your assets. This is your where you park your money. Okay, so number four is stay flexible. BlackRock says the world's changing fast. So check your investments once a year to make sure they are still making sense to you. Use tech wisely. All these firms use fancy tech to track markets. You can use free apps or brokerage accounts to stay on top of your money. Fidelity's got great tools for beginners. So, yeah, go check that on their site. Talk to someone. This is the sixth point I would like to emphasize, that just like this channel, this is just your starter course in what's happening in the economy. You should, if this feels overwhelming, chat with a financial advisor, the person who actually knows more of it and have deep insights into the market. They can help you build a plan that fits your goal. So, guys, what makes each firm special? Each firm has its own vibe. BlackRock, they're the biggest with the dollar 11 trillion in investments. They're super into AI and big trends, so their advice feels cutting edge. On the other hand, Vanguard, they're all about saving your money with low fees. Perfect if you want simple, no fuss investing. If you want to go with State Street, they care about the planet and offer investments that help the environment. Plus, they're big on custom plans for big investors. Fidelity, they're like your friendly teacher with tons of tools and tips to help you learn investing. So, what actually advice you can get from this video is that there you have it, folks. The big firms say 2025 could be a good year to invest if you are smart about it. Stocks and bonds can grow your savings, but spread your money around. Keep fees low and don't stress about short term bumps. Don't panic. Start small, maybe with a simple index fund, and talk to an advisor if you need help. So that's the advice over there. Start simple, start low, and then grow your investments and do it long term. Don't go for, yes, you can go for small bumps and dips into the market, but don't panic. The market goes up and down daily, so go for long term. That's the output of 2025, and try to go for tech stocks and uh, your money into government bonds for safer bets too, so that when market tanks, your other investment comes in. So yeah, that's it. If you like this video, hit that like button, subscribe, and ring the bell for more money tips. Drop a comment. What's your big savings goal for 2025? I'm reading everyone. Until next time, keep growing your money the smart way. So, yeah, see you guys.